Hello investors, welcome to Simpli Stocks. In today's video, we are going to talk about an emerging precision manufacturer. Recently, I have seen, and you must have also noticed it too, that other precision manufacturers in the market, such as Sansera Engineering, Azad Engineering, or Omnitech and Unimec, have performed quite well, and they are trading at high valuations. So while I was studying this sector, I found an emerging business within it that is currently growing fast on a small base. Plus, it trades at a good valuation levels compared to other peers. So its name is KDDL, and in today's business analysis, we will be studying KDDL in depth. KDDL is a unique business, and today we will talk about its business segments, results, future outlook, and also the risks associated with it. Now, if you are new to Simply Stocks, my name is Vikalp Mishra, and on Simply Stocks, we continuously bring new business models for you. And our overall hit ratio has also been quite good too. So you can subscribe to our channel. With that, you will keep receiving timely updates on our all future business analysis. Now, without any delay, let's quickly get started. Now see, even though KDDL is a small cap business, as you can see, its market cap is just 4,000 crore rupees. It is still quite a diversified business. So it has several different businesses. To give you an overview, it manufactures dials and hands for Titan, Timex, and several Swiss luxury watch brands as well. So this is the first segment of KDDL's watch components, where it makes watch parts. Apart from this, the company recently started a bracelet division where it manufactures metal bracelets for watch brands. Then the second business is of the luxury packaging segment under the name Ornapac. In this segment, it manufactures such fancy and premium looking packaging for watch and jewelry companies. After that, the third and most interesting business segment is Eigen. Now, listen to me here carefully. So, watchmaking requires a lot of precision and detailing, and KDDL is using this exact expertise and skill for other industry segments now, where it is making small parts and precision components for sectors like aerospace, EV, industrial, and electronic products. And this segment has overall done quite well for them. Now, moving forward, we will understand all these businesses in depth one by one, but I hope this gives you a broad overview what KDDL does. And one more thing here, KDDL is also the holding company of Ethos. Ethos is listed, and you might already be aware of it. I think that it is a fast growing luxury watch retailer. You must have seen Ethos stores as well. They are in the business of selling luxury expensive watches, right from Rado, Tissot, and Omega to Rolex. Now, the thing is, roughly 1/3 of Ethos business comes from exports, where they supply components to luxury watch companies in Switzerland, Japan, and Europe. Apart from that, you would be surprised to know KDDL is actually also a monopoly stock. They control 80 to 90% market share in India. They supply watch dials and hands to players like Titan, Timex, and Fossil. And in the export market, KDDL mainly faces competition from China and also Thailand. That is why their diversification into bracelets will help them from there. Now, as for the demand side, after COVID, there was a brief boom when sales of luxury Swiss watches, they boomed for a moment. But then the demand for those watches slowed down. What happened was your China and Hong Kong, they are the biggest markets, but there the demand cooled down a little bit. So that is there. However, side by side, a positive development that has also occurred is that previously watchmaking, or let us say luxury watchmaking to be precise, had gotten consolidated in Switzerland over time. But now watch manufacturing is growing in other countries too. So therefore, KDDL is targeting manufacturers in your countries like Japan and also European countries like Germany, UK, etc. They will be supplying watch components over there. At the same time, India has done quite well. So that is also their sales of analog watches are increasing and the demand is good. Like if you look at it, the results of watch division of Titan or the results of Timex, so they have been good over the last 1 to 2 years. So that is also a trend which is playing out in India. Now, as I was telling you that KDDL has 4 to 5 different business segments. Now, let us quickly go through each of these business segments separately and we will understand them thoroughly in depth. So, firstly, they have the watch components business. In this, They make components for all the players from Timex and Titan to even overseas luxury watch brands. So KDDL makes different products such as dials and also hands or watch needles, and also the indexes, meaning the numbers or markers which are drawn on the dial. Now, in this segment, they have also recently entered into bracelet manufacturing. Now, making these components obviously requires a lot of precision, and the more expensive your watch is, the more precision and fine finishing it requires. For example, it could be that a thin watch hand is half gold plated and the rest is plain. So even that level of finish is required. So KDDL has expertise in all these things. In FY26, that is your last year, roughly 240 crore rupees of their standalone sales, or about 48% of their total standalone sales, came from this segment alone. Bracelets separately generated 40 crore rupees in revenue, which is not included in that 240 crore rupees business. But if we add that too, then a total of 55 to 60% of the business came from watch components. Now, furthermore, they have been continuously expanding their manufacturing capacity as well, like they are adding electroplating capacity. And apart from that, they have a capacity to manufacture 75,000 bracelets, which they are now scaling up to 1.2 lakh rupees over the next 8 to 10 months. So their bracelet capacity is currently operating at 75 to 80% utilization, and this capacity addition is going to help them further. And if I tell you this, very few people know that for expensive Swiss watches, 70 to 80% of the components must be of the Swiss origin, meaning they must be made in Switzerland. However, bracelets are not classified as Swiss origin. So companies outsource bracelets. As a result, KDDL is even supplying braces for expensive watches. Now, after this, the second most interesting segment, which I feel is the main trigger for KDDL, is Eigen, or their precision manufacturing business. Like as I was telling you, watchmaking requires precision and expertise. So they are using this expertise to supply parts to different industry segments like aerospace, defense, auto ancillaries, battery management, alternate energy, and so on. In this, they utilize their core skill sets such as molding, progressive tooling, and precision stamping. Last year, this segment contributed roughly 200 crore rupees, or about 40% of their total standalone revenue. And they have also actually provided a list of their customers on the websites. So that is also quite interesting. Here you can see that they have a very strong client base where they supply components and parts to Keynes, UTC Aerospace, Vishay, which I also discussed in our previous Shivalik Biometals video. And then they supply parts to major players like TVS and Siemens too. Now, what makes Eigen interesting is that precision manufacturing is actually, quite a trending theme, or let us say a trending sunrise sector right now in India. And you must have noticed that other precision manufacturers in the market like Sansera Engineering, Azad Engineering, or Omnitech, Unimac, etc. So they have performed well. They have performed quite well, and right now they trade at high valuations, because the precision tolerance limit, in this space or in this sector, it can be as minimal as a single strand of human hair, or even less. So otherwise, what happens is your product gets rejected, right? Because these products are used from the point of view of safety or critical standards, or in those products where the like safety is of paramount importance, let us say airplanes, or it can be any other critical product, let's say medical device. So no compromises allowed over there. So for the clients or suppliers, the stickiness is also high here. So companies do not change their suppliers easily. So whichever company is supplying precision parts, firstly, it is difficult to make these parts. Secondly, the stickiness is also there. So this makes it a moated high ROE, high margin business. So that is why this sector is trending right now. And what is more interesting in Eigen's case is that it holds a very small market share in the overall precision manufacturing landscape in India. So the base itself is very small, so the company can easily grow fast from here for a long time to come. Across all sectors now, they have highest exposure to EV, energy storage, and also electronic components so far. So mostly they will be targeting these exact segments now for the future growth. Now, a humble request just before moving forward: if you are liking this video so far, do give me a thumbs up Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week, because honestly your likes and subscribes are our only motivation, so that we keep bringing such high quality research to you for free. So do like this video, and yes, also subscribe to our channel. Let us get back to our discussion. Now we will talk about their third interesting segment, which is Ornapac. Ornapac is basically their packaging division, where they manufacture premium, fancy looking packaging for jewelry and watch companies. So this is also a good business. They started this division recently, and on a small base, it has done well. It has grown well. So it has delivered about 35% growth over the last year. Now, currently about 5% of their business comes from this segment. So although it is a small division, margins are high here. And in this, they are mainly targeting your luxury international brands. But as I told you, it is currently small and it is a new division. So it is not yet profitable. And management has communicated that it will become profitable after H2, or let us say, sorry, not after, from H2 or after September this year. Then, as I was telling you, KDDL also owns Ethos. Ethos now has about 100 luxury watch stores across the country, through which they sell famous luxury watch brands like Rolex, Cartier, Rado, and Seiko. Apart from this, they are also rapidly expanding in the pre-owned luxury watch market, where they have started selling certified and genuine pre-owned, or let us say second-hand watches, because this market is also growing well. As a luxury watches, you are many times limited editions, so that drives strong second hand demand too. So that market is also booming. Now Ethos has consistently grown at a rate of about 25 to 30%, and their plan from here is to double their store count over the next 3 to 4 years. Plus, the luxury watch market in India is also doing well overall. The demand for luxury watches and also Swiss watches in India, it is growing rapidly. So we can expect about 25% growth for this business as well going forward. Now, KDDL holds about 50 to 51% equity stake in Ethos, because Ethos is a luxury brand, or let us say it has a luxury positioning, and it is also a retailer. So you will always find it trading at a premium valuation. Now, here roughly you can take Ethos market cap to be about 7,000 crore rupees. So KDDL's stake is valued at 3,500 crore rupees. Now, on top of this, holding companies typically get a 50% type discount, meaning the market will not give full 3,500 crore value to KDDL's holding, because KDDL is never actually going to sell it, right? So therefore, you can consider the value of Ethos within KDDL to be about 1,750 crore rupees, half of 3,500 crore. But the point here is, all in all, what I'm trying to make you understand is that KDDL is a very well diversified business. Now, before moving on to the results and valuation, let us look at their last emerging segment, where they actually own a Swiss luxury watch brand. So this is also something interesting. So KDDL owns Favre-Leuba, a Swiss luxury watch brand. This basically comes under the company named Silver City Brands, and you might be surprised to know that from 2011 to 2023, it was under Titan. Then later in 2023, KDDL acquired it to revive it once again. So yes, for them, this is still a small segment, but overall management has repeatedly stated that this division, it is doing quite well, and there is a strong demand for their watches. Now, the skill set KDDL poses here is that through Ethos, they have a very good understanding of the luxury watch market, basically how the luxury watch market operates in India, which models sell, which ones don't, how the complete supply chain works, and also how a strong brand can be created. So all in all, through Ethos, they have they have the requisite experience and skill set that they will now use to grow Favre-Leuba. Currently, they are not thinking about adding more and more brands over here. Right now, their main focus is purely on growing Favre-Leuba properly from here. However, there is an optionality that if Favre-Leuba does well, then Ethos can perhaps bring in more brands and turn it into a house of brands. But for now, the company is running it as an independent premium luxury watch brand, and the management estimates that this segment can actually double in value this year, and overall it is doing well. Now, so far we have seen what KDDL does, what are its different businesses. Now, let us quickly look at their recent performance and financial results. So overall, their performance has been quite good. We will first look at the standalone business, which includes watch components, Eigen and Ornapac. And when you add the Ethos business to the standalone business, that forms your consolidated results. But here we will first evaluate the performance of the standalone business. So here you will see that during the months of January to March, or basically Q4, KDDL delivered good top line and bottom line growth. But let us look at full year numbers, as those are more important. So their sales grew by 34% over the last year to reach 496 crore rupees. Apart from this, the margins remained mostly stable and EBITDA grew by 32%. So there is a sharp quarter-on-quarter margin improvement too, but it would be better actually if we just look at the annual basis for margins. Similarly, you will see EBITDA expanded and net profit grew by 56% to reach 76 crore rupees for the full year. But yes, do remember this 76 crore FY26 PAT figure, because we will use it later for our valuation. Then their precision components and watch parts business, they are doing well, growing well. But the newly added businesses, which are your Ornapac and also the bracelet division, so they are not yet profitable. So that is putting a bit of pressure on the margins. That is why we have not seen margins expand yet. Otherwise, normally what we see that in manufacturing setups, the operating leverage kicks in and margins expand. But yes, moving forward, as these businesses stabilize and become profitable, we will get to see margin expansion in KDDL as well. Now, apart from this, as I was telling you earlier, sales from watch components contributed 48% or 240 crore rupees to the standalone sales. Other than that, which is a growth of 20% over the last year, 40% came from Eigen Precision Engineering, generating roughly 200 crore rupees in sales. It has delivered a strong 35% year-on-year growth, and a small 4 to 5% contribution of around 23 crore was from Ornapac division, which grew by 37% year-on-year, and the remaining 8%, which is about 40 crore, came from bracelets. So Ornapac and your bracelets remain smaller segments for them as of now. Now let us move forward. So here you will see good growth in the consolidated business as well. Sales grew by 31%, but profits, they did not increase. Now in Ethos, over the last 1.5 years, a minor issue that has come forward is that it is a capex heavy business. So you have to invest a lot in opening new stores. Then also the stocking, you have to stock expensive watches. So inventory also takes a lot of capital. So because of this, Ethos margins are not expanding right now, as the company is rapidly expanding. They are adding new stores. So they are into expansion phase and margins are not expanding. Then the second thing is that these watches, they are imported from Switzerland, and like the US dollar, the Swiss franc, so that is also a strong currency compared to INR. Therefore, currency fluctuations have also put a bit of pressure on their margins. In the luxury segment, you cannot, let's say, raise or then lower your prices every 2 to 3 months. So that creates distrust in customers' minds. So they increase their rates in a set pattern, but this time the currency movements were a bit sharper. So that also put pressure on their margins. But that is not a very major risk. But yes, we should see it stabilize moving forward. And yes, we have to keep it monitoring. But that is not something big as of now that we should mind in Ethos. Yes, one benefit they receive is that in KDDL, that since KDDL is an exporter of watch components, while Ethos is an importer. So net currency fluctuations roughly offset each other out. So that is a benefit that KDDL investors get here. Now, as this video is getting long, let us quickly jump to valuation. So that is important. Let us not wait too much. Now, so far, as I explained what KDDL does, all its different businesses, and also how its overall performance has been. Let us get to valuation and also the opportunity which is there right now. So yes, one thing more before we get into details, that whenever you study a diversified business like KDDL, a sum of the parts valuation method is followed. Sum of the parts valuation method. So where you have to value all the individual segments separately, because what happens is that different businesses, they behave in different ways. Now their various businesses, they are roughly growing at a rate of 25 to 30% at the KDDL standalone level. So we can assume a growth rate of about 25% for the company. Then additionally, the Ethos business, there also the guidance is for 25 to 30%, and all this very well aligns with the management's guidance too, that they will continue to grow at 25% CAGR over the medium to long term. Now, moving forward, looking at this table, you will see KDDL's market cap currently stands at about 4,000 crore, and the market is valuing it at a PE of 45 right now. Now, this 4,000 crore includes the holding in Ethos as well. Ethos market cap is 7,000 crore rupees. But as I told you, KDDL holds about 50 to 51% stake in Ethos. So, KDDL's holding value becomes 3,500 crore rupees. Sorry, Ethos holding value for KDDL becomes 3,500 crore. Even within that, as I had mentioned earlier, holding companies get a discount. So, we can say that out of this 4,000 crore, if we apply a 50% discount on that 3,500 crore rupees stake, the resulting value of Ethos comes to 1,750 crore rupees. Meaning, out of KDDL's 4,000 crore market cap, the 1,750 crore represents Ethos value, and the remaining 2,250 crore rupees represents the valuation of KDDL's own standalone business. Now, KDDL generated a standalone net profit of 76 crore rupees in FY26, which I had highlighted that time as well. So, that we can say that market is, when we exclude the Ethos value, we can say the market is currently valuing standalone KDDL at a PE of 30. And on this, we can take 25% growth guidance, which management guided or what we are seeing in business right now. But here, understand one more thing, that there is also a scope for re-rating over here. Like during this video itself, I have mentioned 2 to 3 times that all your precision manufacturers, they trade at premium valuations. But for some reason, the market currently does not fully understand either KDDL's potential and also the, let's say, position of standalone business. So I will keep the same 75 PE for Ethos that the market is assigning to it. And for KDDL's core business, I am assuming 25% growth, and I will value it at also a 75 PE, projecting 3 years down the line. That market will assign a roughly 75 PE to KDDL's standalone business 3 years down the line. Therefore, the estimated total market cap comes out to roughly 14,500 crore rupees, which in my opinion is what market should value KDDL future 3 years, 4 years down the line. Now, this I know might be a bit tricky or difficult for you to understand. So if you want, you can actually replay this section again to get a clear idea of what I am trying to explain. But yes, don't get frightened. This sum of the parts valuation is how you actually evaluate a company which has multiple businesses. And it is actually not very much complicated. In very simple terms, KDDL will be valued one way, the standalone business, and the Ethos will be valued in another way. And I hope I have simplified it well enough for you. And by doing this, I see a potential of 50 to 55% CAGR, or that is the opportunity I see in KDDL. So this is also an interesting segment that you can study on your own. And yes, as an added bonus, if Favre-Leuba performs exceptionally well, or let us say if Ethos achieves higher than 25% growth, so these are additional triggers that could play out in KDDL. So in that case, we can expect, who knows, even more than 50-55% upside. So you can make your own assumptions around this, but I have given you a brief, or let us say actually not brief, actually a very good idea how you can value this business yourself. Now, lastly, if you like this video, please do drop a like. You can also subscribe to our channel Simpli Stocks, because finding such businesses and then researching them takes a lot of time and effort. And if you support us through your likes and subscribes, I'll be able to bring more such businesses for you every week. So do drop like, and yes, also subscribe to this channel. With this, I'll see you in the next video. Happy investing.